Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. Hopefully you guys had a decent day. Definitely, we walked in this morning. I think most of us were scratching our heads like, why are we even up, 8 to 12 handles? It just made no sense considering the type of action we saw yesterday. But, most traders don't look to, chase a gap up or sometimes chase a gap down. You typically fade them. Trading 101 is something opens up a lot. You look to short versus the highs and see if it comes in and fills the gap. Same thing if something opens down a lot. You look to buy versus a low, and if it could build, you go with it. If it then breaks the low, you don't. But anyway, with that said, the market complexion was different coming in today anyway. We talked about Investors Business Daily going to market correction. A complexion change that hasn't really had an effect on the market. I'm not saying it ever has an effect on the market. It's just really just measuring the condition of the market. But the last 2 or 3 times they did it, we corrected and then that was it. There was no downside follow through. So we came in today saying, will this be different? So we needed to really, survey the landscape and figure it out. So if you did fade, in the first 15 minutes, you really never had any pain because, once it came off the lows, because I did the same thing, came off the lows and you could have shorted with a 20-cent stop. I took it early, traded around, it did whatever, but then also put on the puts. We'll get into that. But really, it was just a straight down day. And group by group, little by little, things went negative. High beta went negative first, giving you some signs. You saw Google that got the $1,000 price target go negative, get hit. You saw Amazon go from positive to negative. You saw Netflix up $1 through yesterday's low before even blinking. So there were things that were giving you clues. And then the banks went red, and then even the home builders with Lennar getting upgraded. It couldn't really, have any kind of bounce with potency. So little by little, everything added up, and then you put the levels in there. And you look here at the chart of the spiders, and you will see, here you go. Okay, there's your outside day on May 22nd. This was your first spot to say, okay, I am going to get a little bit more flexible. I'm going to sell some loose longs. I'm going to maybe get net short. Then we talked about this wedge type pattern being put in place right there. This was your first minor wedge. Okay, where you had a lower high. Then remember that Friday, it engulfed it. So that was, a spot that you got some follow through to this area. And then remember we had, you had a little bit of a reversal right here. But then remember we went up and the sellers controlled it. Okay, something different, something that they weren't able to do, during this correction. You bounced off it and it penetrated it. Here, you bounced through, what was the middle ground here, and it penetrated through it. So this was something different that then gave us that move down to the Thursday red dog reversal, which was really nice at the 50-day. From up here down to the 50-day, it made sense to get a nice bounce, right? 5% off the highs. First time that's happened. I think this was about 4% and this was almost about 3%. So anyway, from there, you had the big powerful move through the jobs report. Okay, and then on what was it? Monday, you then stalled at this downtrend line, right? That inside day. And then yesterday was pretty weak. Okay, and then during the day yesterday was when we started just, kind of kidding around, but I was trying to tell everyone a little bit of my conviction level. And remember, right around here, I'm like, I gunned ahead. I think we see 161 before new highs, and then we hit 161, and I was like, okay, good, no bullets in my, what. Anyway, yesterday I started talking about another, pistol to head or whatever you want to call it, thesis, which you never have to do as a trader, But anyway, I stated that I don't think that yesterday's low sticks because people were saying, oh, that's the reversal point. I was like, no. And then I said, I think an 80% chance, which pretty high level of conviction, that we see the 50-day again, and that obviously we'd have to trade through 162.74 to add to that conviction. Okay, and here we are, stone throw away. We'll see what happens tomorrow. But I also said that I do think the 65%, which means a better than average, that we could see the 100-day, meaning that we don't hold this level, this time around. And then after today's action, I'm like, maybe that's 75%. And I think that would be welcomed. I think this would be very healthy because overall, you look at, this was, this is where we are from the November rally, but why don't you even go back a little bit further from, last year, okay? Remember last year at this time? Last year, over the summer, okay, which was right around, let's go there, which was right around here, this is where we were. So overall, we've come a heck of a long way. So that far distance traveled, we still haven't seen more than a 5% correction in all of 2013. We saw a 5% correction. I'm not exactly sure what this was. This was, I think, close to 10 last year. Okay, you remember that head and shoulders pattern after the first quarter? This was almost, I think, from here to here. I'm not going to calculate it right now, about 10%. And then this one was also, remember when tech got weak and, we broke this level here, which was, I think, like 1440, if I remember correctly. And this was like 7 or 8 or something like that. So here we are, and we've come that far. So I think this would be good. I'd love to see it move down to here. So obviously, first, a few things have to happen. That would be, you get to the 50-day, see what type of bounce. This was a pretty strong one. Maybe the next time we touch it, it does a little feeble or doesn't. Or then we see how we handle 160 and a quarter. Okay, because once we break below this trend line, then, we'll see what happens. But ultimately, yesterday, if you watch my virtual trade floor, okay, I went pretty much back from, if you come back to me, we talked from May 22nd, I pretty much went tactical versus portfolio on that outside day until we went into that red dog reversal bounce, and then yesterday I was like, okay, I'm back to tactical, gonna look to put on some puts again, trying to figure out how I can make money to the short side because I'm not the greatest short, but I just want to be out of the way. And then today, I think around 11 o'clock, I was like, I'm buying next Friday's 162s and the July 161s, and I think a lot of people in the VTF did the same, tweeted it out for people in the Twitter sphere if they wanted to do it. So far so good. We'll see what happens tomorrow. Anyway, you roll through some sectors and you're seeing some damage here. Look at the home builders, by the way. Home builders, Lennar got an upgrade today, and it still really couldn't bounce. So you look at this trend line all the way back here. You have a few of them. This hasn't been broken, and this is getting close to that trend line where it's pretty important, right? That's getting close. So we'll see what happens there. That starts to break through that trend line, and you can see some, at least to the 200-day, because stocks within this group are already through it. Toll Brothers getting very comfortable below the 200-day. Lennar got upgraded today after getting crushed, and look at it. It closed red. On an upgrade, couldn't even get going. So, on major support. So you're seeing some weakness that we haven't, seen in a while. Then remember yesterday we tried playing Netflix for a long and it didn't work. Thank goodness for stops. I think I got out at like 217. This actually broke to the downside. Okay, this downtrend that was controlling it did not go to the upside. In actuality, it broke to the downside. So now we'll see how it handles the 50-day. Maybe we get some kind of trade here. It's in the gap, but we'll use today's low to figure that out. But we haven't seen a high beta name like this break down with follow through in a while. Yes, we've seen some higher levels give way like this one, or maybe even here, but not into a gap like this. So anyway, we'll see what happens. But that's another sign. Apple also starting to get weaker. Starting to roll over. I know that some, Chart Girl and Taylor, they were in there trying to short it, and I just stayed away. Last time that you could have thought that it was going to be decent was right around here when it broke this ascending channel. It kind of started to negate this inverted head and shoulders pattern that I was trying to hang my hat on. Okay, but when things don't look the same, you get away from it. So it broke down. This was your developers conference. It was supposed to be a catalyst, and it wasn't. And now it just, it closed below the 50-day. That's a sell signal technically. We'll see what happens tomorrow. But if you were to do something overnight, you should probably be more short than long. And if it opens up, you might get a way out of it. But ultimately, this resistance now, we're far away from it. And now here, you have a whole new little level that it's following to the downside. Amazon, after its break to the upside, started coming back in the base as the market's proving that it's not ready for, breakouts. I wouldn't say game over here, but you had a really nice 2-day move into highs and then sort of got rejected. And now it's back in the base. So we'll see what happens. Maybe we draw this a little bit sideways now, and if it could then hold above here, and if the market pulls in, well, we could try again. But it was a nice 2-day trade, and then now it's okay, back into the base. Google broke out above that what was it? 870 right here, and we talk about descending channels. Here is one of them. Okay, here is another one. But calculated wise on day 3, talked about how 890's resistance, trim some, and then here was your upper level, which it didn't hold. And now let's see if it could hold above where it broke out from. So we'll see what happens here tomorrow. If it starts just heading back down, you'll know that the market's that weak that nothing's really holding that much higher. Goldman and the banks, still holding up best, but kind of getting choppy here. Some of the other ones look a little weaker. Like look at Citigroup. Citigroup's already below this recent support here. So like I said that I think that when you look at Goldman, it's one of the few that made new highs. While some of the others don't look so good. Some are even saying this is a little bit of a head and shoulders pattern where if you go, what's the distance? What's the head here? The head here is like 53.50. Boom. We could probably see the 50-day here. Also yesterday I did sell my Bank of America just because I do think it also is vulnerable of a little bit more downside. So I'm going to be cute and see if I could pick it up somewhere around here or maybe even closer to here. If this does trigger, okay, we see the 100-day, there's no reason why this can't see somewhere in this zone, which still, it's come a long way, so not the biggest deal. It's just something that I think I could save myself a few percentage points by waiting since I'm in front of my computer every day. As far as the TBT, we've been talking about keeping this in the drawer. It's, at some point it's going to break above this 70 and go. And it looks like it's going to. I know it trades erratically. That's why we're like, just buy it 6 to 18 months from now. Look at it again, and you'll probably see it a heck of a lot higher. Same way you'll probably see the TLT a heck of a lot lower. Remember, we drew this head and shoulders pattern here. Left shoulder, head, right shoulder. It's already below the neckline. But, give it some space. This should see at least 100 at some point. I don't know, not soon, but at some point. So if you want to have it as a position, short the TLT, I think is good. That new issue, what was it? GMIO? I only looked at it a few times. I actually missed it, but whatever it was a decent new issue today. The 3D printing stocks, they opened up and couldn't hold. The open, so went from looking at it as a good idea to trade above this. Didn't happen. Now it's kind of closing the low of this inside range, so we'll see if it could hold into support here. So it's just it's a no trade right now. Same thing with SSYS. Actually, this one held up a little bit better. So we'll take a look there. What did Tesla do today? Tesla hung in there. It's wedging again. This will be interesting to see which way this wants to resolve. It was definitely stronger than other things out there. So here it is. If it could start getting above this 100 and change, perhaps it goes again. But again, if it starts breaking below, that would really show a signal that the market's that weak, that one of the best names that people like to flock to isn't holding up. Some people made some money in this Solar City. It went and failed. Nothing you can really do about that. I was looking to see if it could get above and stay above yesterday's high. It did it for a little bit and then came back in, so I think it needs more time. The shares are unlocked, so at this point, at any time, it feels like the shorts could get squeezed, but you need to keep the volume up, or the volume needs to stay up in order for it to stay there. So at this point, it's still, maybe you draw like your descending little channel here. So here's your support. There's your channel. At some point, it could get better, but with the weakness like you're seeing with the secondary announcement and something like FSLR, which broke hard yesterday, was it was really weak. So hopefully some of you got out of it. I know it was a bit of a trap and hard to deal with, but you could always salvage a trade. This stock closed on the dead highs. Remember that? And then boom, gap down, closing the dead lows. That right there is a pretty bad trap. Somebody knew something. So hopefully if you were in it, you salvaged it, and then boom, look at this. Closing the dead lows, breaking this trend line. This could be the end of this group, for a little while. I'm sure SPWR looks the same. So, that does look like a little wishy-washy too. So all in all, there's been some of these signals adding up that, first we were thinking a move to the 50-day, which was about a 5% off the highs, and now it looks like it could be a little deeper. You're going to hear the chorus out there, 10%, 15%, 25%, it's over, I don't think that's the case. If you're a long-term investor, I don't think you should be cashing out your 401k or your 529. I think stay your plan. But if you're an intermediate trend trader like myself, or a lot of the guys that you follow, you see that I no longer have 6 to 8 positions or 10 to 15 positions like I did for the majority of the first quarter. I've been back to tactical. Even before that May 22nd high, I started getting a little frustrated because I trim and trailed myself out of a lot of things. So this is good. This is healthy. This is a re-rack. This will bring things in. This will, create pivot buys into moving averages that make sense that you could trade from. This will, reset up patterns that could get tight that you could trade from. This will show us leaders for the next time that we go. So embrace it. And I think a lot of people on the site are getting very good and very well seasoned, even people on my feed, not to get caught, not to chase excitement, not to get overwhelmed with volatility. And, if you embrace it, you can make money from it. So at this point, I'm basically out of all my positions, was out of it yesterday. We had some good entries from the short side today, did put on some puts. We'll see what happens tomorrow, and we'll just keep maneuvering it. It's a summertime. Take some trades, be tactical, have a lot less risk on, enjoy yourself. That's what the summer's here for. You can make money, though, if you're prepared. Big range today, from up $1 to down $1 and change. The big range, there's still a lot of movement there. So don't just close your eyes to the market because it's the summer, but just know that the only way you can make money in the summer is if you're prepared. So if you're going to be here, be prepared. But nothing wrong with taking along a lunch and putting in some stops, or taking a half a day on a Friday if you want to spend time with the family. Have a great night. See you tomorrow.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.